Hey there, military real estate investors. Mark Yancich here again. And in this video, I'm going to be talking about how to mitigate paying taxes almost completely and how to do so by continuously owning the exact same real estate assets. Like if you really love your real estate assets and you never want to sell them, how do you recoup more of the capital that they create? And how do you continuously just not pay taxes on that capital? Well, we're going to talk about that in this video. This is how some of the very wealthiest people in the nation do it. So kick back and watch the video. So I'm going to be talking about the best way to not pay taxes, in my opinion. But first, I'm going to get into some other typical strategies. Okay, so there's two main things that you typically hear about the most when it comes to not paying your taxes. One is depreciation, and the other one is 1031 exchanges. So this is how depreciation works. So you have a property, and the government is essentially partnering with you on that property, and they decide that, hey, if it's a residential property, it's going to go from its full value down to zero in about 27 and a half years. And so you divide the value of the property minus the land, and you divide it by 27 and a half. And then you take away that amount away from the cash flow it creates. So the profit that you're making, you get to deduct that number I just talked about. So for example, if the property, just for easy numbers, is without the land worth $2.75 million, well, then that means that about $100,000 you'll be able to depreciate every single year because, again, you divide it by 27 and a half. So if you made $100,000 in profit, cash flow in your pocket that year, you then get to wipe that away and not have to pay taxes on it because of depreciation. Now, this is a wonderful, wonderful, wonderful thing, except for when you sell the property, those taxes are going to be recaptured at a slightly different amount, but it's still going to happen. And so you have to be prepared for that. But people are super happy about doing this anyway, because guess what? It's deferred. So money today is worth more than money tomorrow. And so you defer your taxes, and it's awesome. Another thing about this is that you can blend in the second thing that most people talk about, and that's 1031 exchanges. Essentially, you sell the property and you have a qualified intermediary put it into an escrow account that you can't touch. And then when you find and identify another property, you basically take all those proceeds and you roll it over to the next property. And so you keep kicking the tax payment down the road indefinitely until maybe you pass away, and then it just disappears. So again, this is what these two strategies, depreciation and 1031 exchange, is what you typically hear about, and they typically work hand in hand. But as I promised, here's another way to not pay taxes, okay? And that is debt. And what I mean by debt is, first of all, when you take out a loan on a property, that's leverage, right? You put maybe 20, 25% down, and then 80, 75% the bank gives you. That's essentially free money, but you don't pay taxes on it. That debt is tax-free. Well, guess what? If you grow the value in a property over time, you can then refinance. So if, let's say, you buy a home or a property that was $2 million and you had the value increased to $4 million, you could then refinance and cash out a bunch of new fresh debt. So let's say it was a $2 million property and you had to come up with 25% down. That means you had to come to the table with $500,000 and the bank came with the 1.5, but then it grew the value to $4 million. So now you have to keep 1 million in there, again, 25%, right? And the bank will give you 3. So what happens is now you're like, okay, I'm going to keep 1 million in it. The bank gives you a fresh $3 million loan. You pay off your old 1.5 million, assuming you didn't pay any of that down, but just for argument's sake. And you're now left with 1.5 million, right? So you pay yourself back the 500,000. Now you have a cool $1 million, just brand new, fresh $1 million hanging out. Guess what? You don't have to pay taxes on that because it's tax-free. It's debt. And in many cases, if you think about it, for that reason, a lot of very wealthy people call debt better, like good debt, they say that it's better than money itself because, again, it's tax-free. And if it is good debt, then by definition, it's making you even wealthier. So that is a fantastic strategy if you acquire assets and you never want to sell them, and you want to continue owning them, but you want to get bigger paychecks every now and then as they grow in value. You do a cash out refinance, you get fresh debt on it as long as the operations, right, its revenue can pay for the new loan and expenses. You could just keep doing that. I don't know, maybe every 3, 4, 5, 10 years, do a nice new refinance, cash out a bunch of money, give yourself a big payday, and then keep holding those assets on indefinitely and pass them on as legacy wealth and legacy assets to your family. Now, can you imagine, like I'm talking about one property, but can you imagine doing this with multiple properties? Exactly. Right now, I have a memory care facility with me and my parents, and we're selling an apartment complex, and we're going to have about $1.7 million to be able to invest into another asset. So we might buy another one or two assisted living facilities or memory care facilities with that money, right? With those proceeds. I'm going to be looking to buy assets that I want to keep forever and slowly grow my portfolio to, let's say, a dozen facilities. And then I will just maybe never sell them. I'll just continue owning them. I'll just make sure that there's good individuals in charge of running them. And then every few years, I might refinance. Maybe every decade, I'll refinance and I'll get a nice big paycheck, completely tax-free. Oh, and by the way, it's cash flowing the whole time, which is also basically tax-free or deferred for a while there because of all the depreciation. Remember, I talked about that in the beginning of the video. So hopefully that all makes sense. This is one of my favorite ways deferring or just basically not paying taxes while you own the assets. And that's what I plan on doing with my legacy assets that I'm acquiring with me and my parents, my partners. So if you found this video valuable, please like, subscribe, share, and absolutely check out our website, activedutypassiveincome.com. This was Markian Sich. See you in the next video.